Good morning, everybody. All right. So yesterday followed through to the upside, up to resistance, and died there. Um, Not surprised. Was surprised by the gap up to that extent. Um, so let's just review. There was the resistance yesterday. The line, remember that line I put in the middle? We're close to the middle of the wide range bar. Nothing proprietary. I just eyeballed it and said, okay, that's about the middle, give or take. Then looked to the left, and those pivots were there, and said, all right, that was the resistance. And you can see what happened yesterday morning. So it's interesting. It's always interesting. That's why we love to do this, right? Of course. So if I can draw this, all right, whatever. What the frick? I'm still got half a hand behind my back here trying to do this stuff, trying to reinforce the concepts. So it opened up there, pulled back, reinforcing, look to the left, right? Why did it bottom there? Well, it bottomed there. We knew it bottomed there after the fact, of course. It came down there. And what you do, what's the factory work here? Right? You mark off resistance, you mark off support. What was resistance becomes support, right? Technical analysis 101. So whether it would stop at that or pull back to here, who knows? So, went up there, back down again to retest that area, and the rally. And we had discussion in the green room. For those of you on the social media, we had this discussion in the green room related to IWM, which I'll show you, and about momentum moves and how you change biases. And let's just review that. Things are unchanged here. They're flip-flopping around, just moving my cursor around to the daily chart. It moved up in the middle of that bar there, and you can see it stalled and coming back in here, flip-flopping around. An IWM, and this is part of, I guess, what we all deal with as far as having a method and making decisions. So the discussion yesterday was, let me just get the little dot here. The discussion was, what do you do with a momentum move like that? It just explodes, and it opened higher and drops down again. So like everything else, you look, what did it come down to there? So what is the thought process? Well, the thought process is that they rarely make V bottoms after momentum moves like that. And they go and make a lower low where momentum begins to slow the difference between the lows. And then you see if it can begin to bottom. Well, it didn't do that. It made a V bottom and it went all the way back up. So your method has to enable you to change your opinion. And the discussion was what concept that Dan and I cover in MT Live every week, that beginning slides with all the MTS concepts. What concept do you utilize to do that? In this case, it was retracements. And how do you know when to change your opinion? That's what I'm saying, Roberto. I think you left. You typically do your trades in the morning and leave. So this was the discussion yesterday as to how you change your bias. And the concept is retracements, which comes down to common sense. Everything we do is based on price action and common sense, meaning I have an opinion and I'm attached to my opinion, right? We all do that, but now we become conflicted when things don't happen the way we believe they would. So what forces you to change your bias? In this case, it's the concept of retracements. And so we say, hello, McFly. Remember the movie, McFly? And then guy knocks the guy on the head. What are you doing here? It ain't working out the way you thought it would. Okay, no problem. My retracement concept says, hey, Greg, common sense. If it was that weak, it would never retrace 90% of the decline. So now what do you do? Okay, well, how do you know that it won't go all the way back down to the lows and you just have a crazy market? I don't. So it's got to create support. How do you do that? Well, I got a little congestion there. There's no pivot because of the strength of the move. no pivots. But once it forms a pivot, it now has created support within this void. And now it starts chopping sideways there. And little tiny trading range, back and forth going on there. And at some point, it's like, okay, is it going to go up? There's my confirmation. It's going to go up. So at this point, I'm in like no man's land, so to speak. It's forming resistance, it's forming support. It could break down and go, it couldn't go lower. I just don't know what it's going to do. And so things are developing. And at times, it just doesn't play out the way you thought, and you get left behind. But we do the best that we can to objectively look at what's happening and change that so that we can find a trade that makes sense, aligned with our thought process to make some money. And so that's what happened yesterday, where it was like, okay, this tells me it should do this. Maybe it'll make a W bottom and it'll go up, whatever. I'm looking at the daily chart and excuse me, like it didn't come down to a support area where for a swing trade where I'm interested in it. So I'm still not interested in this. And we'll see whether, maybe it just goes up. I don't know. Maybe things get negated and we get a red bar and it comes down here where I'd like to be a buyer. So our method creates thoughts as to what's happening now, what that suggests is going to happen in the future. And then we wait to see if there is a price pattern in the moment that's aligned with our bias or not. And then where do I go from there? And that can be frustrating as things become confusing. Didn't work out, 100% retracement. What's it going to do now? Pivot highs, pivot lows. And you just have to wait for some other development to guide you as to what you should look to do. So where are things now? Let's get this over here. And this is what we do every morning. Cursor, where is that in relation to the existing pattern? It's gapping down. Is it gapping down a significant amount? No, it's not. Where is it going to open relative to the existing support and resistance from yesterday? So here we have some support from yesterday. The gray area is pre-market. So this is where it might find some buyers as it pulls back. This is making me crazy, these new Zoom settings here. Oh, that's that one. All right, so down there, wherever down there, or I can utilize this because I don't know, somewhere in there is where it should pull back. And, so looking at the 15-minute chart, I can condense things a little bit. I see this significant support area, and you can see this the cursor on the 15-minute and the 5-minute, which has the overnight trading. So somewhere in there would make sense where buyers would begin to show up here and defend this. If it breaks down below it, clearly, it can break down and pop back up again, little shakeout. But if it keeps coming down here, well, the further it goes into that green bar, the more it negates it. So at the moment, we're in waiting mode to see what's going to happen. So as I explained yesterday in the room, I mean, it's a thought process of utilizing our concepts to decide what's happening now. Is there something I can do or not, or waiting? All right, so we went through that. Let's go back to the spiders, which are bouncing around right at our line there. It's starting to come down a little bit. And this is very interesting. The strikes in SPX. So things moved up, and as they move up, as they did yesterday, the call strike is going to go up. That's just what the expectation is. So now things are unchanged, give or take. And look at these strikes where they're at. So what does that mean? That the downside would move so far away and the market went up. This makes sense And it's an excessive amount to go that far up from where the strike was yesterday. And the only my takeaway from that is that there's an expected anticipation of more volatility. This going down suggests to me, and I don't have, the confirmation of what, it actually happened. We'd have to start looking at, the volume and strikes and whatever the open interest might be. Point being, this went down while that went up, and that went up a lot. So my takeaway is that there's going to be there is an anticipation in volatility, which would make sense based on the gap down and the move down, and the continued move down. It stopped on this support. So that bullish move yesterday in context of what happened is virtually meaningless, because today we need to see, is there going to be any follow through to that? And so that's where we're at. But it's just interesting that these strikes move so far away. Things are unchanged. Are they likely to get to either one? I doubt that very much, that it'll get to either one today. And so that's trading. Develop a bias, for what you believe, and what's the vehicle you're going to utilize to profit from that. And even if it comes down here, it's got all of the support, but between here and there, the value of this strike right now would probably double, just based on the size of the move. But based on historical patterns, it's highly unlikely it's going down there today, unless, what could happen? Who knows what could happen? But anyway, it's unlikely. And there's some surprise. Okay, let's look at other markets, as we always do. Let me see what else is saying. Recession is not on the horizon, according to veteran Wall Street Ed Yarney. And he's been right. He's been right as far as a bias on the S&P. But, as I wrote in the letter, with factual information as to what's happening in the country, in addition to some industrial metals falling, banks closing, stores closing, foreclosures increasing, whether it's a recession or not officially, a lot of people are in recession. Some people are in a freaking depression. It's all about how bad it is, the current situation hurting you. And with, inflation being what it is, and, all the other things that are happening, there's a lot of people that are hurting, and they're withdrawing from their spending, which is what's necessary, unfortunately, to lick the inflation. Because inflation, and the government created this inflation. There's no doubt of that. With all of this money floating around, and they handed out all of these free paychecks for COVID, and people start spending money, they basically threw gas on the fire with this inflation. But, we elect morons. Anyway, so here's the S&P's reversal day yesterday. Gapped up a bit. In the context of this pattern, yesterday is meaningless. It doesn't change our bias of what happened last week. So if today's a red day, that's down here, tomorrow I'll be telling you, it's most likely going through those pivot lows and down to the 50, filling that gap, maybe lower. So we'll see where today ends the day. NASDAQ is down a little bit in relation to yesterday's bar, meaningless. It's at the top. It's on major support. It's a deep retracement. My expectation is this should roll over unless it can retrace deeply up into there. We do have a bottoming pattern on the intraday charts. And so, can it get through that resistance area? And if it can, that would open up the door to higher. Right now, we're basically in the middle of nowhere. It's chopping around. This is neutral. It could become bullish. The daily is not going to become bullish. It's neutral because of the depth of retracement. And I would, if it can go up today, you can see where those pivots are right there, which is the top of that topping tail bar on the daily chart, give or take. That would be the upside target. Maybe it could get to the 20. We shall see. Or can it even, well, take out yesterday's high? It's got to go through those pivots. Well, we shall see what it does. I just want to take a peek at the cues here. That lesson took a long time, so I'm just going to flip through these and hand it over to Dan. Because everything's pretty much the same. We look at futures. And so whether it's YM or the Russell, this explosive move is positive. Ideally, things pull back toward these pivot highs where it sets up a buy setup. That's bullish. Normal pullback and retracement. We go from there. Oil, what a wild, crazy move. Down, up, breaking back down here, and so on. Google, Google was super strong before. Yeah, same as the NASDAQ. Deep retracement, held to 50 on support. Expect consolidation or lower. We don't know yet. Yeah. Interest rates are up a little bit. I see bond prices are down a little bit. Not a big deal. And yeah, take it away, Dan. You can go over. I'll just take a look at the. We already looked at the transports. What's Dan saying to me?
Good morning.
Okay, take it.
All right. Well, yeah. Let's see my alerts here. The alerts I have going off, there's no volume, so I don't trust them. Pale, I've been watching. Nice multi-week turn here with a new low plus. I had an up alarm go off, but don't trust it. XPO, we're short $95 puts. My alarm went off, but I don't see anything, so I don't trust it. But yeah, with UPS down, that's undoubtedly that's a nasty gap. Wow. That is a monthly breakdown in a downtrend. Monthly chart says gap fill $112. Wow. All right, so we'll see what that does to IYT and FedEx, the cousin. Not nearly as bad, but still gapping under that. That was a buy setup. Sloppy, but that was a buy setup. I know this crowd here. I've been watching this, got smacked. This is a company that with Microsoft created that havoc on Friday, yesterday. Wow. Range expansion on increasing volume. That's ugly, but for a day trade, I think it's his spot, his cousin, one of the cousins. So this definitely could be a day trade. And if this were Friday, this would be a fantastic candidate for a zero DTE. Delta 20, asking about spot actually. The problem is the gap's too big on Delta 20. Greg's 7-step process. And we just visualize it. 338 is off my charts. So, put tape over the price. I don't care if it's $300 stock or a $3 stock. It's excessive. Doesn't mean it won't go higher, but and the word excessive is a judgment call. To me, it's visual. Boom, too big for me. But if I were to do anything with this, it would probably be after 3 p.m. Let's see how it holds this. Let's see, Raul here. Raul, you had a great buy setup yesterday. I forget which one. I was watching it into the close and it ran without me. Um, I forget. It wasn't Peo. So Raul's asking about ITOS. Yeah, yeah, buy setup. And Alex knows my eye just instantaneously looks at all four time frames. What also jumped out at me, look at this monthly 1, 2, 3, 4. Look at that. That's beautiful. Now I'm not trading the monthly, but I like it. Sanmina? Oh, I haven't looked at him in a long time. Um, yeah, bullish, daily, weekly, monthly. Sure, sure. Greg talked about IWM. We spent a lot of time in the green room talking about the amount of the pullback, no support, et cetera, et cetera. But this is a powerful turn right here. So I like that too. And XPEL, he's asking. Yeah, it's a buy setup after deep retracement above the 2050. Yeah, so all three of those are good. Well, thanks. Let me go to earnings now. These were after the bell. All right, so seeing that, so this is another buy setup after momentum, but this one's not as good because it's a retracement from a square top. And then I know it's gapping down, but ignore that for a second. This one has the definite potential of failing and making a lower low and looking for a buy setup maybe around the 20. So nothing to do with that. These are earning stocks. Cliff, potential bottoming pattern. I don't know what happened to this last Friday. NXPI 265. So that's a bearish gap. That's a definite call spread idea. The 285s, let's watch for Friday. Gapping down a little in the pattern. Zion, so many regional banks just on fire. Now, see, this looks higher too, but there's no support. And it's, that's a big gap. OG all over the place. We'll come back. Cade, start of a little bull rectangle, strong. We'll come back and new 161 call spread idea, the 167.50s. No longer have an office RE problem. Oh, right. Okay, it took me a second to sink in. What Alex is saying is, regional banks. Remember when they collapsed over here with the regional bank? No, this was still this year. It was no, that's 23. Yeah. So when they tanked here last year, it's they had those regional bank problems. So Alex is sarcastically saying, with the strength of these, oh, the problem just disappeared. Yeah, I hear you. And the answer, the honest answer is, I have no friggin' idea. You know, maybe it is gone. Maybe it is priced on, unless we get news of a shoe dropping. They don't talk about bank closures, but you could look it up. Now, this would have been a great pattern had it opened flat as a continuation, kind of little bull rectangle. But the gap down's messing it up. You're gone. SAP, I don't like ADRs, but that's a bullish gap, excessive. Well, this is a bull rectangle after greater than 100%. I can't tell where it's gapping, but 30-minute high maybe. Valeris opening flat, piece of garbage. I don't see a gap. 108. There's no volume. Graph to extended, no interest. 365. That's a nasty gap. Med P. That's nasty. But in terms of a bias, I had no idea. I don't know what it's going to do. Range bound, no pattern. These are pre-market earnings. Coke gapping up a little bit. Maybe 30-minute high. The bullish gap coming in. You got to pick which ones you want to watch at the open because you can't watch everything. But this is a sloppy buy setup pre-market. So that could be worth watching. 272. The gap's too big for me. GE. Remember we were talking about selling naked puts on this? Gap in top of the range, no interest. Papa Mike. Nice breakout here. This is a bear sandwich breakout. Wow, this is very rare. I didn't get a single alarm go off at the open. That is rare. LDOS. Yeah, looks good. Yeah. I personally don't like trading in the first 5 minutes, but yeah, looks good. Look at our GPS from yesterday. We bought puts. Nice relative weakness. All right, back to earnings. Where are you? Where did I leave off? Wow, if this closes like this, General Motors, that's a bull sandwich. AMB, nasty gap. Spot. Greg's dog's on fire. Wow, FCX. Ugly. MCO. Strong, but look, this is a great moving average example. Starting to get extended, but strong. HCA. Excessive gap. Sherwin, excessive gap. UPS. I'll watch it here. I got it here in the middle chart. Look at this PII. Nasty gap, prior low. I got that in the bottom right. Wow, that's a big gap. MSCI. That is huge. Look, $53 gap. It's over 10%. Holding extended, but holding well. Well, that's not true. It's gapping at 120. So this daily chart, okay, I guess this is pre-market. This daily chart is not printing that gap down yet. Car. All right, buyer stepped up on this. And let's see whenever there's an excessive gap, see that's a nasty gap. But this is an example of when I say I have no idea what it's going to do. Are buyers going to step up at a discount like this? Or is it going to go sideways, relative weakness, and make a new low? Delta 20 asking about Coke. Yeah, I already talked about this one. I said I liked the pre-market. I said watch a reversal, Delta 20. Coke's kind of a slow mover, but yeah, we were talking about this the other day on the gap breakout here in the green room pre-market. In fact, I was going to give it as a directional back then, but earnings were coming up. So let's see if PCAR can hold those gains. GPC looks like a condor candidate. That's a bullish gap, bottoming tail, range expansion. That looks higher. but it's just, not my setup. EGX, no pattern. Excessive gap. See, there's another one. Big old ugly gap. But the buyer stepped up right at the 200. AI, no pattern. Greg's dog spot. LMT, military. Gap breakout. Is that all-time highs? No. Let's see what that's doing to XAR. Wow, XAR, nice buy setup, 180 reversal. Let's see, this retracement is deeper on support. So this is a better buy setup than the ones that are way extended from the 20 with no support. So we should look around in the military sector. Wow, I got crowd on my other computer that gave up those gains. Yeah, see, this is why I don't trade in the first 5 minutes as a general rule. So diamonds, we said yesterday we had a bullish bias for a bounce, and how far would it go? I have no idea. But then, we're hoping for a new low. MMYT, I don't like the pattern. Buyer, look at that. Buyer stepped up at the opening print. The FANG department and the video holding strong. Meta, we did a nice put spread here last Thursday, and I mentioned it again yesterday as a put spread idea, but there was no premium. Google earnings after the bell. Tesla, Netflix. Not, wow, that's a big old mess after earnings. Apple was weak yesterday. Hey, Apple 30-minute low. There you go. That's a bear 1, 2, 3, 4. I said my alarm went off yesterday. Remember, I had an alarm somewhere around here, yeah, right here, 2.25. And my alarm went off into lunch. This looks fantastic. 30-minute low. Let's look about buying puts. All right, my alarm on XPO was faulty. It did not gap up. So I will reset the alarm. All right, this cream, we have a call spread. I said it's on probation because of yesterday's bar. Our Daku holding well. We're long stock and short put spreads. Yeah, no, I love 30-minute highs and lows FT because it gives me more confidence in the bias that I have right now. Because see, if this thing just, rips up and particularly takes out this 15-minute pivot, then, as Greg was saying pre-market, and we say every day, you got to change your bias. And it's like, all right, poked its head here and that ain't going down anymore. But if it goes sideways here for 30 minutes and then takes out the low, it has a void. Has a void, so I love it. Yeah, Papa Mike looks good. Yeah. Stop. Day's low. Steve, give me the numbers, please. That you're thinking. Oh, yeah. No, we this was in the weekend letter. Um, let me see if I canceled it, because then yeah, I canceled it because there was insufficient juice. Exactly. Exactly. But yeah, this was weekend letter. Um, it might have gotten filled at the day's low. I remember canceling it around here somewhere because we weren't getting the credit, but yeah, now it's a red bar ignored. All right, what is transports doing? Yeah, there, it's a failed buy setup. And if it were $5 wide, Steve, I'd be all over it. So that's just a judgment call because, doubling your potential max loss. How's our AMAT doing? AMAT gap down a little. We have a put spread. It's fine though. I'm surprised with NVIDIA strength that it gapped down. Microsoft put spread, and he usually has juice. Let me check 430s. Yeah, Microsoft is always juicy. 430. Well, I said always juicy, and 430s are only 56 cents. So, no, but that's far away too, $15 lower. But this could be a day trade too. That's a bullish 15-minute chart, you all. 100% retracement, bullish price action, breakout. Let's watch this. We have 4 minutes to go for this bar. I mean, there's nothing magical about waiting because you could say, well, Dan, why a 15-minute bar? Why not a 5-minute bar? And my